Recording in progress.
What's up, everybody? Happy Wednesday and welcome to today's edition of Ninjacators' new weekly live event, Profits at Noon. Welcome, Fred, Hal, it's great to see you. If you're joining us over on YouTube, welcome. Very glad to see you. Happy hump day to everybody. Clanton, always good to see you, sir. Welcome back. Blessing, James, Burnt, welcome back, sir. Always great to see our familiar faces. This is the Wednesday edition of Profits at Noon. We're going to get started in just a minute here, as always, giving everyone a chance to trickle in, get settled. It's great to see you two. Excellent. Thank you so much, Hal, Fred. Hello. Awesome. My name is Nate, everyone, for those of you who may not know me yet, and I am co-hosting these sessions with our very own Richard Krugel. The man, the myth, the legend, King Richard is back in the house today, so he will be leading this session. Later on in the session, after the analysis, we have a tool spotlight planned for you. Today we'll be taking a look under the hood of the Pure Pattern Trader. So stick around, that's going to be great. As always, if you have any questions throughout the presentation, please feel free to fire away here in the chat. That goes for you over on YouTube as well. We'll always make room for Q&A. Always happy to discuss with you. So we are just a minute after the hour here, so I'm going to start kicking things off, and we'll pass the reins to Richard in just a second. For those of you who may be new to this event, this is Ninjacators' new weekly live event called Profits at Noon. We are live 3 days a week, Monday, Wednesdays, and Thursdays at noon Eastern Time. So we're going to show you all the levels that we are stalking for entry. We're going to steer you clear of any market traps, news bombs, or surprises that could be waiting around the corner. In addition to all the very cool live analysis you're about to see, we are going to give you actionable levels that you can copy and stalk along with us. And of course, we do encourage you to join us in the follow-up sessions. You'll see all these trades in action. You'll see the analysis play out. In addition to all this cool stuff, I know I've been teasing it for a while, but I do want to mention one more time as we are getting closer to the launch of this, our Levels to Lock newsletter that will accompany these sessions will be available soon. We're going to have some updates for you as soon as coming into this next week. And just a refresher, that newsletter, the Levels to Lock, will accompany these sessions. We'll have all the levels that we cover in these sessions, and that will be prepared bright and early in the AM by none other than Richard Krugel, who is located in Cape Town, so has a 6-hour advantage on us here in the Eastern time zone in the US. So he cranks these reports out very bright and early in the AM, and we will have that available for a very small fee, a low barrier entry to that, promised and guaranteed. So stick around. We'll have more updates on that soon. But as for now, I'm going to bring in our very own Richard Krugel to lead the analysis, cover our levels to lock, after which we will do our tool spotlight on the Pure Pattern Trader and any Q&A. So Richard Krugel, welcome back, and to you, sir.
Thanks, Nathan. Thanks for the great intro as always. And hello, everyone. Nice to be back again. Had a bit of a break. I've been struggling with a bit of a cold for a while, so that seems to be a bit better. You probably can hear that my nose is not that blocked anymore. So yeah, I had some time to rest, well-deserved little break, and I'm back again. Great being back with you guys. All right, as Nathan said, I'm going to obviously do today's analysis and then also give you a bit more insight on the Pure Pattern Trader, one of my favorite tools here at Ninjacators. Also done a recent trade on demand video series for that tool, and had some really, really nice trades using it. So I can't wait showing that to you. So please do stick around until the end. All right, I'm just going to disappear for the analysis side of things off camera. Before I do dive into the live charts, just a quick reminder that all information in today's session is provided for educational purposes only, and it's not an offer or recommendation to trade futures, stocks, options, or Forex. Okay. First things first, as always, we're going to look at the ES, and then we're going to follow that up with the NQ, the YM, Russell, gold, and crude oil. I'm going to be using a combination of my analysis techniques, mostly based on market geometry, pattern analysis, as well as our very important levels to lock, which are these little blue and red horizontal lines that you see over here. One is just your standard bullet points that you can find on the Trader platform. And we also have these dotted dashed lines on the top, which are our projected ranges, which is based on the previous day's volatility. So like Nathan mentioned, when that newsletter is ready, I'll be busting out these or revealing these levels, as well as my overall sort of trading plan for the day, my projection where I think price might be heading to, and you'll have these these levels before market opens and or stock market opens, actually about 15 minutes prior to that. And then when we do the actual profits at noon session, we'll look at how things have played out during the morning session and how price is trading in relation to those levels that I mentioned. Right, so I think Craig took the reins on Monday, was it? And he probably showed you a lot of these channels. Some of them were mine that I had in my chart, and he's done a fantastic job. I did watch that recording. Always cool to see how you got similar sort of views from different analysts and so forth. But in any case, I'm just going to quickly recap what I've been looking at here for a while. A lot of you guys will probably be familiar what we've been following or what I've been doing here. And I've been mentioning for a while that I've been thinking that this move here in the ES potentially being some sort of a leading diagonal that could potentially kick off a much larger move to the upside. It's already been quite a strong move to the upside, to be dead honest. I've also had this channel over here. First of all, we had this lot of zigzaggy behavior, which made me believe or think that this was a leading diagonal. But as always, I always have a plan B. In this case, that unless certain levels are broken, which I'm going to be talking about in just a while, that this might also just be some sort of a complex corrective pattern with another move lower to follow. But in any case, in light of the yearly CPI figures that came out, it starts showing that the Fed's plan to tame inflation has been working all right. Looks like it is cooling down a little bit. Also note that we have the Fed meeting minutes at 2 p.m. today. So a lot of traders believing that, they might just hike by 25 basis points again, or potentially not at all. But then again, on the other side, and don't ask me who they actually interview for this sort of stuff, seems to be very high bets that a recession is looming and that it might be just a short-lived one, with the stock market potentially taking a hit until around about the October timeframe. Don't ask me how they forecast these things. A lot of time, I should say most of the time, they get these things completely wrong. So as a technical analyst, we just trade what we see, look at our levels. In my case, we use market geometry price analysis as well, and basically just have our targets to look for and change as maybe our biases as things change. So for the moment, I'm staying bullish on the ES. That being said, we've had this area here that we've been looking for potential reversal. It was a very short-lived one, a very shallow one as well. And this was just as price hit an upper area of market geometry, and in this case, a upper channel line. And that was basically using these three anchor points to draw the channel, low to high. Price reached it. It was also a 100% fib extension of this first move, which I'm counting as one sequence to the upside, and then another one to the upside. Price then moved lower. And I was also mentioning that this potentially could have been the end of this move with a much deeper correction to follow. Or potentially, if you look at the second sequence, this one over here, that we might have just seen a 1, a 2, and there was questions about whether there was a 3, a 4, a 5. But you couldn't really see a 3 and a 4. So I'm thinking this was a 3, potentially just an A, B, C of some sort. And then price just recently, actually today, when the CPI numbers come out, just pipped this previous high. All right, so this does not start looking like we have that fifth wave sequence that either completed or needs to make another move. Now, whether this whole thing is bullish or whether it's corrective, I do expect at some stage, potentially soon, that we'll see a correction to the downside in any case. All right, when that starts happening, we could probably start seeing or start noting, I would say, from my side, once price breaks these, let's say this channel line to the downside, that actually is a good indication that a deeper correction has, started already, and that this sequence to the upside potentially ended. All right, I spoke to a lot of traders, a lot of these, even mentors that I've had through the years. Some of them with decades more trading experience than I actually have. And they've all been saying very, very difficult to trade these markets these days. So, just that's what I'm saying, either or. Either in a leading diagonal or we just completed a correction with another potential massive downward move to follow. So always keep that in the back of your minds. Obviously, we'll try to prep you for these sort of things. I am bullish, like I said, but I've also learned through the years that you don't just stick to, one side of things and have your ego sort of inflated when you're right about things, and not the willingness to change that bias when things actually, start showing signs of that you're being wrong. So again, just in the back of my mind that we might have an ABC here as well, rather than a leading diagonal. Okay, so before I switch over to the NQ, I think sort of the first indication would be that we seen the end of a correction rather than a leading diagonal, would be when we start seeing very fast, sharp declines with very small pullbacks to the upside. That might just be from the price action perspective an indication that we actually have seen the end of correction and that we need to start planning for a much larger decline. All right, and then one of the reasons I'm saying that, if I look here at the bigger picture, is, and this is some sort of account that's been coming from a big company that follows Elliott wave analysis. I'm not going to mention their name, but they've actually been labeling this entire move that started here in 2022 as a 1, a 2, a 3, a 4, and a 5. An expanding leading diagonal. Now, this is extremely bearish, all right? Meaning that what we're seeing here since October last year is potentially corrective, whether it's going to go higher, whatever the case might be, and then we're going to see one hell of a sell-off. Now, I've been following these guys not for the analysis, but sometimes they're right and they really pat themselves on the back if they are trying to forecast things. But most cases they are very wrong. I call them closet bears, if that makes sense. They just really want to be right about things when the financial world goes belly up. But I have to sort of agree that this could be a possibility. But over the short term, just so you know, all on the same page, I do think that we're in the leading diagonal. I'm going to stick with that analysis until, I'm proven wrong. All right. So these levels to lock, you will have seen that price sort of been hovering just slightly above and below today's pivot point around 4,139. No issue reaching R1, took out R2. It even reached the projected range high. It even went as low as almost to the projected range low deviation. And obviously, this all just potentially just the CPI numbers that came out today, and potentially now just fear of what is going to be revealed in those minutes at 2 p.m. All right, so we'll have to recap things tomorrow and see where price is. Can't discount that we could see a correction to the downside still. But again, I'm just going to be treating that as a correction for the time being. Right, enough on the ES. Let's quickly look at the NQ. I've had this pitchfork here on the NQ using the 3 most prominent anchor points prior to the strong move to the upside. And there's been some decent, how can I say, reactions to these angular support and resistance lines. Different sort of price action than on the ES. Obviously, it comprises of different stocks that make up the NQ. But yeah, following what the ES is doing in a bigger picture, and you'll obviously have your NQ and your YM follow suit, although they are different indices, obviously. NQ today has been below today's pivot point at 13,114. Just took out R1 a little while back, and that was probably that little spike that we've seen during the CPI numbers, reaching R1 and actually went above that as well. Very interesting how it's been sort of finding support and resistance at this channel, or sorry, this median line over here. Came very close to reaching this lower median line of this pitchfork sloping to the upside. And also interesting enough, it sort of creates a confluence between today's S2 at 12,959 and today's projected low deviation at 12,000. What is that? I can't see that now. 12,948 plus minus. All right. So again, guys, you'll have these levels in that levels to lock noted and ready in your inbox prior to the start of a session. And then these levels will obviously make way more sense when you actually have them prepared before the day starts. All right. YM, same sort of thing. Again, different price structure, but also had a very strong move to the upside. I think it was last week or beginning of April-ish. We've had this area where we think or thought price might decline a little bit and sort of just been running sideways. Ranging for a little bit and since now broken back to the upside. I see price already reached R2 at 34,075, and just above that we have the projected range high today at 34,137, as well as this red warning line, what I call it, on the upside. So this pitchfork's also been working really well as support and resistance. So I think if price were to reach or break above that, it'll be very bullish, but also be aware that this might also act as resistance. All right. Russell, like I've been saying for a while, not a favorite market for me to trade. It's been just extremely messy. Good luck trying to, I don't know, trade up here and immediately being met by sellers, up and down, very messy. Not an easy sort of market conditions to trade on the Russell. That being said, I do have this pitchfork up here. We had a previous instance where price ran into angular resistance. There was a bit of support over here. Sort of fell short of this median line over here and sort of now been bouncing on top of that median line again. Again, ranging sideways for most of the day with a little bit of a spike earlier on, as well as a spike that we've seen to the downside just now. Then gold. If you guys have been obviously following me for a while, I was saying that gold was potentially tracing out a triangle, and that was sort of run about this area here. I was saying that it could potentially turn out to be a triangle. We wouldn't know for sure until we assume that a D wave might end, and then we needed to see a decline. That did happen, and if we say that if this decline fails to take out this previous low, which happened again, that we've pretty much got a high probability triangle on our hands, and then we could expect another breakout to the upside. Now, obviously, that did happen, and I've been saying as well that this sequence from the end of Feb, that I was counting this as a 1, a 2, a 3, the triangle as a 4. So you count your fourth wave at the end of the correction, and the triangle is at the end of an E wave, not here. All right, right over here. When was this? On the 2nd of April. And then we expect another high to break this previous high, and that we then could potentially see a deeper decline to the downside, potentially an A, a B, a C, depending how strong gold is going to remain, or even much deeper, potentially building into 1, 2, 3, 4, 5 for an A, zigzag up, and then another leg to the downside sort of thing. That is obviously if we're going to see a single zigzag. It could easily be a more complex pattern. But in any case, I was also mentioning that you quite often see your fifth waves travel 123.6 to 138.2% of the height from your third wave to the end of your fourth wave. We did get that, and I've just actually drawn this in here today, this channel going from this low, from the A to the E to this high in the third wave, and our fifth wave also find resistance there. So a bit of confluence between market geometry, ranges on your Fibonacci extension side of things, as well as what this pattern suggested, as well as a bit of Elliott wave, all pointing that we could potentially see a larger decline on gold. And I also mentioned before I go over to crude oil, that be careful that when you do see triangles, they tend to form as the fourth wave or the penultimate correction prior to a high before a larger correction unfolds. So that's still my view. still think that gold could potentially move lower from current levels. All right, sort of also been hovering sideways. Again, will most likely be affected by what the Fed's going to say in the meeting minutes today, or reveal in the meeting minutes from their previous or most recent meeting that I've had. But you'll also see why I've drawn this channel, that there's been a lot of instances previously with access resistance. It broke below here and it's acted support. It just touched that at today's pivot point, also lying around about where that center channel line is, this dashed line. We also have this projected range low. So that area is sort of between 2015 and 2017. So potentially an area of very strong support. But since I've been saying in the bigger picture that we might see a deeper correction, I think if we do see a break below this, whether this happened today, tomorrow, this week, whenever, I mean, we might even get another move to the upside. It might become wrong that this fifth wave is over. But if we do get a break and a close below here on the 4 hour, then I think we got a decent chance to see gold take out these lows that was set on, when was this, the 10th or 11th? The 10th of April, potentially even making it low as this lower channel line. And obviously, we'll update these things as we go through our next profit at noons again. All right, so sorry, I was just glancing here at the chat box. Let's quickly look at crude oil, and then I'll jump into today's button or sub products spotlight and going over the Pure Pattern Trader software. All right, crude oil. As we all know, beginning of April, well, I'd say if you follow crude oil, Saudis decided to halt production of crude, and we had this one hell of a massive open to the upside. Now, I've been viewing this as a potential 1, 2, 3. And I was saying we either have a 4 here, or expecting a fourth wave. Let me just quickly drop a number in there. With another fifth wave to follow. All right. And then potentially get a deeper retracement. Again, on this pitchfork, for those that are new to market geometry, although price has left the boundaries of this lower pitchfork, using 3 most prominent anchor points prior to this move to the upside. But if we copy and paste it to the upside, you can see here where price has reached that. That's potentially a third wave. Or if crude remains strong, I could potentially be wrong about this and still think that the third wave is underway, with the fourth wave later, and then a fifth wave to follow. That makes sense. All right. So crude's been very strong. I am bullish on crude. Did mention a while back that we're probably going to see a lot of this energy that's been spent to the upside being absorbed for a while in the ranging market. And it's been ranging since that high. And it's been lasting for, what was this, from about the 2nd to the 11th yesterday. And now finally we're seeing these highs being taken out again. All right, so just take note, we are at today's resistance, or the second resistance point, around 83.07. And we also got these projected range highs and their deviations to the upside, which are at, which is price is just added right now, actually, 83.08. We got a projection high deviation at 83.41 and 83.75 just above that. So it potentially still be reached. It looks like crude was obviously being, not looks like, it has been very strong. So I do think there is this probability that this is still a third wave that's underway. So yeah, my expectation is still bullish on crude oil, but just also being very aware that if we're going to end in a third wave, or if this is a fifth wave, whatever the case might be, that we're potentially going to see a short-term correction to the downside at any stage. All right. All right, that's pretty much it from me on the analysis side of things. If you guys got any questions to ask about that before I proceed to the Pure Pattern Trader, then please let me know. I'll be happy to answer that, and then I can jump into the tool spotlight quick.
Sure. Well, thank you so much, Richard, for the analysis as always. I see my video is glowing. Let's see if the quick trick works. There it is, and it worked. Awesome. Well, we appreciate the analysis, the insights, and very excited for that Levels to Lock newsletter. I know we're both harping on that. We both mentioned it. But yeah, we're definitely very excited to have that. So if anybody had any questions about the levels today, any of the markets we've covered, please feel free to fire away in the chat, whether you're here with us in Zoom in the VIP bottle service section, or if you're over there in the simulcast on YouTube, please feel free, fire away in the chat. We're more than happy to dig into it with you. We'll leave a little room for that, but just so you're aware now, we're about to segue into our tool spotlight for today's session, which, as you know, which the title was probably a good hint if you joined us on YouTube, is the Pure Pattern Trader. It is our automated price pattern recognition to find any kind of explosive move 3 to 10 ticks earlier. So Richard is, as you can see, loading on the chart here. We're about to dive right into that. So it looks like we don't have any questions coming through for the analysis, Richard. So I will go ahead and get out of the way, let you roll up your sleeves and show them around this Pure Pattern Trader. Of course, feel free to fire away in that chat with any questions on this tool. We will make some space at the end of the session here just to make sure we cover that. And then, of course, we'll give you a quick glimpse on what to expect for tomorrow's session. But again, I'm fading into the mist.
All right. Thanks, Nathan. Okay, no more questions coming in, or any questions coming in. Let me jump straight into things. All right, guys. So the Pure Pattern Indicator is basically an automated tool that looks for the most popular patterns. All right. It works on any time frame. I've got it loaded here on a 3-minute chart. I've actually done a on-demand video series. I think I've done about 5 videos recently where I live traded the Pure Pattern Trader. Really love the software. Combine that with a very certain way or technique that I like to manage or enter trades and manage them as well. But then again, what's really cool about this indicator suite, or should we say tool, is that once you've loaded on your chart, you'll be presented with this toolbox here on the left-hand side. And if you hover over all of these, this is your settings. If you click on that, you got swing settings, swing strength that can go from very small to very big. And now I like using the very small one because I like to actually use either 1 minute or 3-minute time frame. You might want to up that strength when you go to a higher time frame. And then we present it with all the patterns that the tool actually identifies. We got double tops, double bottoms, triple top bottoms, head and shoulders, cup with handles, rectangles, flags, ascending and descending triangles, as well as symmetrical triangles, right? And then what the tool will do is identify all these patterns for you automatically, all right? And then it's just a matter of actually trading them or deciding, you know, should I get involved in that pattern, whatever the case might be. So what you do is you'll see that they are actually red at the moment. You can go into the settings of each single one of these. You can make the patterns whatever color you want to, but I've just kept everything as standard default when I traded the system. I actually do trade the system a little bit on the side. I really like it, especially the head and shoulders patterns. Sorry, the cup and handle patterns, which have been working really well for me as of late, especially in very trending conditions. Again, on any time frame. So once this is loaded on your chart, I just want to collapse that quickly again. You know, it sits here on the left-hand side of your chart. Now, if you were to right-click on any one of these patterns, you see how those patterns actually appeared, the historical patterns, right? Now, I can have all of them on my chart. It's going to be extremely cluttered. So all of these patterns here has been identified automatically by the tool, all right, or by the software. I'm just going to actually close them all down quickly. So what I like doing is we also built in a scanner, and that is looking for any one of these patterns on a 1-minute time frame or a 3-minute time frame. Now you can actually drop in any time frame you want in here. There's also instructions online when you do decide to purchase this, how to do that. But the scanner also does come with the software, and this really makes all the difference, you know, especially if we've been following a lot of markets. I like looking at the ESNQ, crude oil, gold, and the 6E, which is the euro. And whenever you get a pattern it will pop up here once that pattern's been identified. It will also tell you the actual pattern that it has identified. Like this, for example, on gold, it identified a cup formation. And on the cup formation, that 4 over here, I don't know if you can see that properly, actually means that it basically identified the cup formation 4 bars ago. In this case, I'm using 3 minutes, right? So 4 times 3 is about 12 minutes back. All right. So that is what this all means. Again, the scanner really makes it really easy for you to spot these patterns for you. And then what I normally would do is, like, let's say on gold, in this case, it would be a 1 minute. So I should actually go to the 1 minute, but I'm not going to do that right now. I'll then go ahead and just quickly click on the corresponding pattern that the scanner has identified, if that makes sense. All right. I don't have a 1 minute loaded here, which I should have actually added, so we can have a look at that pattern. So you see, I've not got any signals here on my 3 minute for the time being. Obviously, if you're using a smaller time frame, you're going to have quite a lot of signals being populated. And like I said, rather than actually having all of these on and having your chart cluttered, you just quickly go over to the corresponding chart and, you know, go activate that one that it's just mentioned. Now, let's quickly have a look at this cup and pattern, cup and handle, sorry, pattern, what am I talking about? Which is one of my favorite patterns to trade with the software. And basically, there could be different magnitudes of these patterns, right? And you even get targets that it actually projects where price could potentially move towards. And in some cases, a pattern might take longer time to form. And in some cases, a pattern might take shorter time to form. So you might have patterns that have, in this case, a very deep cup side of the formation. And you might have a shallower cup formation, right? And sometimes it also happens that it identifies 2 over each other, whatever the case might be. All right, so what happens here is that once the formation's actually been identified and price breaks a validation level, that's when this will actually pop up here on the actual market analyzer or the screen, all right? And then it's just a case of, let's take this example over here. It was about 6 o'clock yesterday, was it? By the looks of things. At a cup and handle formation, there was actually 2 of them. If you see, there's one over here, the bigger one, and there was one down here as well. Now, if you took this first one over here, what I quite often like to do is to, and then obviously depend on your risk, which is very, very, very important. Let's see if I can get rid of that one. See, this first one would have worked out really well. In any case, once it's been identified, in this case, using a 3 minute time frame, you can then very quickly see that on your scanner, jump into the chart, load your cup formation, and see if this is actually the pattern you want to trade. For example, has the trend been an uptrend? Do you want to be going to the upside or not? Maybe you have a cup formation, but it looks like you're in a downtrend, and then I'll rather pass on the trade, if that makes sense. So with a cup and handle, I mean, I can go through all of these for you guys. We can probably look at another example or 2 just after this, but quickly talking about entry here, I would then quite often then get into a trade 2 contracts slightly above the validation level. I'll place a stop loss. Quite often like placing a stop loss below the, in this particular pattern, the handle side of the pattern, and then have a target at a 1-to-1 ratio measured from my entry to my stop loss. In this case would be 10 ticks. Figure out where 10 ticks is to the upside. And then take 1 contract off there. In this case would have been very, very sort of volatile. I like to, once that contract's been hit, reduce the risk on my remaining contract by half of what my original distance from my entry to my stop loss was, and then have an area, in this case it would be 15 ticks, which I call my trade management level. How much was that? Yeah, 15 ticks. You can see there's actually quite small range. Once price hits a 1.5 ratio, again, all explained in those videos, I'll then move my stop loss to break even plus a few ticks, and then start trailing below 1 minute candles, and in a very specific way. Actually, candles that continuously make new highs and breaks and closes above previous highs. And what this does, it actually allows you to quickly book profit on the first trade, reduce also your risk again, so you can't lose on the trade again. But at the same time, when you do get these beautiful, strong runners, you have a method of actually trailing your stop loss to the upside and actually, banking decent profit out of it. So in this case, you made a candle, made a high. These candles, they did not, although they made new highs, they didn't close above the previous high. So my stop would then remain there, for example. Right, so I'm not really talking about the tool too much here, but I hopefully understand also the importance of actual trade management. And I found that this works extremely well with the pure pattern trader. All right, again, also all explained in those on-demand videos that I've did. And then we'll have, let's say, a break over here. Candle makes a new high. These all stay in line. That one over there. And you'll continuously trail all the way to the upside. And quite often, I've seen this. You get these nice, beautiful, strong runners. Well, it's 117 ticks in your favor with a 10-tick original stop. And obviously, this is on your second contract. So you traded 2 contracts. So it's not really a 10-to-1, but it's still a massive, massive, massive trade that could have resulted from that. Again, you can obviously go ahead and try to spot all these patterns on your charts on your own. But I found that, again, just using the scanner, and again, you can do this on any time frame. Once you actually start seeing these things pop up, let's, for example, look at the NQ, it identified a cup on there. And I've actually got them loaded on different charts. Just let me quickly shoot over to the NQ and activate the cup, for example, over there. And here it actually did an upside down cup, right? And it identified that for me, and it's actually on the 1 minute, sorry. And I'm on the 3 minute here. Let's say, for example, this was the 3 minutes. I'm getting myself messed up here. There was no signal on 3 minutes. But let's say it was on the 1 minute. I would have done exactly what I've done now. But obviously, price would still just be here. And then you can decide if I want to chase this or wait for a pullback to the validation level and trade to the short side. In this case, this trade wouldn't have worked out. But if you followed that risk management techniques, you would have already been out on one contract and reduced your risk in your second contract by half, and you would have still walked away with profit. All right, so also the actual trade management side, which a lot of traders don't talk about, also included in those on-demand trading videos. And it's quite a lot of these patterns that actually popped up. Again, I really got a liking on these actual cup and handles. They work extremely well, especially when you have strong trending conditions. Again, you can decide to trade this on any time frame. I just like either the 1 minute or the 3 minute. I like to be in and out of trades pretty quick. So almost using a bit of a scalping mindset, if that makes sense. All right. So let's just quickly have a look at a different pattern. See, we got our double top, double bottom patterns, all colored in different colors here. And you'll have, all of them all over the show. All right. So very simply put, there's not really that much to it. It's just that the software really does identify these errors or these patterns for you automatically. And what I found, obviously, with the scanner, which is really the game changer, if you follow a lot of markets, you can get quite a lot of trading opportunities, obviously, depending on your time frame. And again, identifying these without you having to do it is really why I like the software so much. And then deciding if you want to take these trades or not to get in and out, using the default settings. And, some traders like having all of these things on. I just like to do it like I did, having nice, clean management on my side of things, switching to the chart where the scanner picked up a pattern, activating that and quickly making on-the-fly decision when I want to trade that pattern or not. Right, so that is pretty much it, guys, from the pure pattern trader side of things. Very nice software, very straightforward, but then again, does all the heavy lifting for you, so you don't have to basically scroll through your charts and continuously mark them up all the time.
Perfect. And that is the ideal Ninjacators tool, really taking that heavy lifting off your shoulders and kind of carrying some of that weight. So very cool, awesome presentation. Thank you so much for showing us a look under the hood of our pure pattern trader. As always, when we do these, what we like to do is just include a link or a coupon for you guys if you want to go check it out after this session or go learn more. We like to give you the option just to have a little exclusive discount from us. So if you go on the storefront, the pure pattern trader is listed for $8.97 MSRP sticker price, but we'll drop a link here if you want to check it out. That basically it loads an order form that takes $500 off that instantly. So it's just a $397. So hang on to that if you want to check it out. Again, we're not here to twist your arm in the middle of the day. We do encourage you to hang on to it, to check it out, and to utilize it if it's something you're interested in. Of course, if you had any questions about that, please feel free to reach out. I do see we had a question from Harold, Richard. I'm not sure if you saw that come through.
I have, yes.
Okay, great. Just wanted to check. I did have to take a quick phone call in the middle there. Just wanted to make sure that was taken care of. So
no worries.
Excellent.
All right, Harold, are you asking if the dollar with the dollar getting weaker, do you still think gold will go down? Harold, I'm talking short term here. I'm not thinking gold going down as maybe changing trend to the downside. As we all know, that markets move in zigzags, going up and down, not in one straight linear line, for example. So, just thinking and looking at the actual analysis side of things, yeah, I do think gold can move lower, but just going to treat it as corrective in nature. So whether that's going to happen now, a little bit later, whatever the case might be, I think gold is ripe to move lower. Like I said, potentially we could still make another high and then come down, or it's already started making its move to the downside. Now, again, who knows what's going to happen with the Fed's meeting minutes, with the markets, it's crazy these days. You think one thing, news comes out, you think, okay, cool, this is how things should work, and then it does completely the opposite. So, yeah, we just have to watch what the charts do. Again, just to answer your question, that the dollar is getting weaker. Is gold going to go down? If the dollar moves lower, it probably can. And it's not always that they inversely correlated that much. You can have, during their opposite cycles that they're actually moving, still have corrections. So, yeah, as long as you just, are we on the same page? And I think that gold will just do a correction lower, basically, rather than actually, starting a new trend to the downside, if that makes sense.
Excellent. Well, thank you so much for the insight, Richard. And Harold, hope that answers your question. If you had any other follow-up to that, please feel free to fire away there in the chat. Of course, always happy. Harold says thanks. So I think you did the trick there, Richard. Awesome. Well, I'll do one more shout out to anyone joining us over on the simulcast on YouTube. You can check the link or for a link within the description that'll put you into these Zoom events with us, get you in here with the VIP crowd. So do encourage you to do so. But thank you all for joining us. We're getting close to wrapping up here. We'll leave a little room for any more questions to come through. Of course, we mentioned a few things, covered a lot of things today. So I just want to harp on that Levels to Lock newsletter again. Stay tuned. We're very excited to roll that out. It's something we've been working on as we continue to scale and grow these Profits at Noon sessions. I do also want to mention, of course, we are back tomorrow for the final session of the week. And as a quick reminder to anyone who's new to these sessions, we are live 3 days a week, Monday, Wednesdays, and Thursdays, all at noon Eastern time. So tomorrow we do have a very special guest in store. Some of you may remember him from as recently as Monday, if you were with us in that session, but Craig Hill, our very own Craig Hill, will be back in the house tomorrow. So he's going to be stepping in, not as a guest host, because Richard will still be with us, but Craig's going to come in. They're doing a special event this Saturday. He'll have an invite for that, and I think we'll ask him to, maybe draw up on Richard's chart on the ES again and do some Q&A. So it should be a really cool, fun session again, have him back in the house. And then, of course, we'll keep you updated rolling into next week on what other surprises and special guests we have in store. So it looks like we don't have any questions coming through here. I think everybody is quite content, it seems, on this hump day. It's a little gloomy here in Southwest Florida. I'm used to my sunshine, but Yeah, it is still raining here. So hopefully it's sunnier for you guys. I heard a lot of people in the north, it was warming up a bit. They were getting some sunshine, so I can't be too selfish. At least someone is getting it. I get it year round. Well, thank you so much, everybody. Richard, I don't know if you had any other notes to add, any parting wisdom, or if you have thought any terrible jokes. In your time off this weekend, if you came up with anything, but I would yield the microphone to you if that were the case.
I don't do bad jokes, Nathan.
Even
I'm
Craig
trying
did
not
one
to. I
Monday.
can't even remember jokes, to be then honest with you. Yeah, just watch out for these meeting or the minute meetings coming out a little bit later. Maybe get a surprise. Who knows? And yeah, we'll just pick up where we left off tomorrow again. See
Perfect.
what's happened with the markets. All right.
Sounds like a plan. And if we don't have a plan, we are planning to fail. So you heard it here first at Profits at Noon. Thank you, everyone, so much for your time here in the Zoom, over there on YouTube. Please hang on to that Pure Pattern Trader link we shared with you. If you're interested in that software, definitely check it out. We encourage you to utilize that coupon and save some bucks. But in the meantime, have a great rest of your day, everybody. We will see you tomorrow for the next edition of Profits at noon Eastern sharp, back with Craig Hill in the house. So thank you again, everybody. We will see you tomorrow. Bye-bye.
Awesome. Cheers, guys. Take care. Bye-bye.